Hello Goku, welcome back to our YouTube channel.
Thank you.
We said that we want to talk about the value investing scene in India. What can you say about the value investing scene there?
I think it's a pretty vibrant value investing scene, primarily with the amount of social media penetration that's it had, either it's Twitter or WhatsApp. You have a very, very vibrant value investing scenes. For example, Value Picker Forum, where people collaborate on investment idea discussions, a very vibrant forum for small and mid cap investors. Or there's a lot of user built tools in India, which value investors have built for other value investors. So screener and stuff like that, which is pretty attractive. So the value investing scene for collaborating with other people to research together is actually pretty strong. And in from an Indian context, let's say if you are a investor based out of Bangalore and you're looking at a company which is, let's say, operating in Calcutta, if you have an investing friend there with whom you can collaborate, that's a big value addition. So even when I was heading the research team at the old boutique firm, the way we used to work was we had a lot of network of investors, like-minded investors, who we used to work together on ideas based on a specific sector or geography based focus. So I think India has a pretty strong young value investor community, and you can see that in the Twitter followings and stuff, so on and so forth. So the number of people who actively tweet about Indian markets is pretty high, and the number of people who follow some of these Indian value investors is also a pretty big number. So for example, one of, as I said, my friend mentor, Vijay Kedia, I think he's being followed by, 300,000 investors or something on Twitter. So that pretty much says how many investors are there in Twitter and so on and so forth. So yeah.
Are there interesting names to follow on Twitter?
Probably I can send you a link and then you can provide it.
We'll put it there.
You said you're also in other emerging markets. You said they are currently interesting. Why is that so?
So, see, because of my background of coming from India, my first set of countries that I look at is the Indian subcontinent. So, outside of India, there's Pakistan, there's Bangladesh, there's Sri Lanka, Myanmar. So, these are probably the markets where I personally spend a lot of time. And again, after that would be Southeast Asia and Middle East, which is Malaysia, Vietnam, Thailand, Indonesia, and Saudi Arabia, Kuwait, Oman, these markets. So one thing which I can say is that all these emerging markets, since the 2007 crisis, most of them have not had back their emerging market boom. So you've had a very long period of divergent return. So if you do a markup of developed markets in essential US markets versus emerging markets, the spread is now as wide as it was in the 97-98 crisis or pre-crisis, maybe not as big, but yes, almost something similar. And that is a long period of underperformance that set up the huge emerging market bull run from 2002 to 2007, when emerging markets outperformed developed markets in a big way. So I'm not saying something similar is happening, but what I'm saying is now you find a lot of attractive opportunities in these emerging markets where valuations are still reasonable compared with US, where after 10-year bull market, you're seeing a lot of excesses built in the economy and in the stock market. In emerging markets, some of these economies might have some excesses built in with the capital that came out of QE into these names, but a lot of the currencies and the stock markets, I think, are pretty undervalued. So you have both the double Davis kind of thing, where the stock markets have earnings growth and re-rating, and then you have a currency effect on top. So I think the risk reward is pretty attractive in a lot of these markets. But as a investor, I'm not a top-down investor, I'm a bottom-up investor. So for me, it's on the idea that makes sense, and then I look at the market. So I'm just saying, from a fishing point of view, I'm seeing a lot of interesting opportunities coming. And also, if you really pull back a little back and then say, where is incrementally a lot of growth happening globally, it's not that difficult to say it's emerging markets where the demographics are better. They're all starting from a very low base, so there's a lot of low hanging fruits in terms of reforms. A lot of them have had a lot of positive reforms that's happened in the last 10 years. So structurally you have higher growth rates, and when you have higher growth rates and lower valuation, that's a pretty attractive combination. The only thing you need to be a little bit careful is, it's easy to say that number of people flying 10 years from now in emerging markets would be much higher, or let's say number of room nights would be much higher, or the number of houses constructed would be a multiple of what it is being constructed now. All these are pretty easy to say. I think the difficult part is, what is the path of moving from A to B? From, let's say there's 5x increase in some of these demand, how would that happen in the next 10 years? Is it like maybe 1 year there's minus 20%, next year there's plus 40%? So the path is the problem. And when you have that kind of thing, the only right way to invest in these markets is to take a long-term view. So for you to take a long-term view, you need to run long-term funds. So for us, it's good that I'm working on permanent capital, so I have the ability to go and say I'm ready to invest in this business for 5 to 10 years or so. So that, plus the fact that you always need to be aware of investing with the right people who can take you through these volatilities, because if you're investing in a company which has a bad balance sheet, irrespective of how much demand is growing, in a bad cycle he gets killed, so he's never going to take advantage of the up cycle. So it's twofold, as I said. It's the management team and making sure that they're having a clean balance sheet to play it. I think that plus the fact that you're in the right spots where there's growth gives you the opportunity.
What countries do you currently see as most interesting?
As I said, I'm not really a top-down investor, so for me it's difficult to say. But what I can say is that the entire Indian subcontinent plus Indonesia, this is the markets where I see a lot of opportunity, because you have huge population bulge happening in them, and the demographics are getting better, where you're getting more and more people into the working age population. And these are still countries where the per capita income is much lower, and these are getting these have had a lot of good reforms in the past as well. So for me, it is Indian subcontinent plus Indonesia where I think the opportunity set is pretty attractive. But again, it's purely bottom up for me. There's a very, very attractive fintech company in Russia, TCS Holding, that we own. That's not because I'm bullish on Russia. That's just because it's a stock that I think is pretty attractive. It's an entrepreneur I'm willing to bet on. So at the end of the day, it doesn't, if Indonesia is very attractive, that doesn't mean that I go and allocate certain percentage to Indonesia. It's a reverse, that I need to find an idea and then I decide how much to put as a percentage of my portfolio.
What other companies do you think are interesting currently?
So in emerging markets, of course, as I just we spoke on Russia, this TCS Group Holding is the retail name, the trading name would be Tinkoff. I think it's probably one of the best fintech platforms that's out there from a global basis. Leave aside Russia, from a global basis. And I think it's trading at pretty attractive valuation, and it's run by a person who still has huge skin in the game. So management plus the owner put together own 47% of the bank. And what's attractive in Tinkoff is that usually you see, and then you can easily say, okay, these financial companies are very good on the asset side, and these financial companies are good on the liability side. Or within that, you can say these companies are good on underwriting or collection or payments, and then those kind of stuff. In Tinkoff, what I've seen is they're very, very good on both sides of the balance sheet. So they have built a very strong payment platform that gives them a very strong liability franchise through float kind of payments. On the asset side, they've had a very strong historical experience of underwriting on the most riskiest segment, which is credit card lending in Russia. So underwriting, collections, and origination, all three have been pretty good on the asset side. What they're trying to do at this point is trying to become more like the super app, where they're using this base and trying to add customers and pretty much create a package where you get customer at one service level and then sell multiple things. So even though they are a bank, they are one of the largest sellers of airplane tickets or hotel nights and stuff like that, because it's the payment platform through which all these payments are being done, and they're trying to build one layer after the other. So it's the only reason I think it's cheap is because it's in Russia, and Russia is now not favored, and Russia has all forms of risk. And as I say, as a disclaimer, that we have invested in it, so I have a bias in saying the good things about the stock. So I would encourage all of them to do their own research. But personally, I think it's a pretty attractive story, and you can always manage your risk at your portfolio level by position sizing. So for us, we would position size appropriately as to what we think is the real risk of investing in Russia. So you can always do that, and the good thing is it's listed in London markets as well, so you don't need to have a Russian broker or something of that sort. And fintech as a space is pretty attractive as well, because you're seeing humongous disruptions in the way lending business and the deposit gathering business is happening. So you're having a lot of interesting businesses coming where you don't need a branch to get deposits. And historically, or in Germany, if you speak with the older demographic, people would say, how do you deposit money where there's no branch? But we are seeing so much of branchless banks which are having huge deposit bases. So for example, Tinkoff doesn't have a single branch, but they have a very strong deposit base. And what I'm very attracted to them is the way they've executed this fintech story. So unlike the VC deals or Revolut or whatever it is, where you see all of them making losses, and I have no idea how they are going to make money of these customers. Here I'm seeing a business that's already profitable, that's already well scaled up, and has a very dominant position in a particular market, and is run by a team that has shown me execution skill. So yeah, that's a stock that I like, and as I said, I would encourage everyone to do their own research.
Are there any other ideas you want to share with us in emerging markets?
In India, for example, it's not a stock at this price. We are not bought it at this price, but we have a position. So I'm not encouraging people to look at it at this point, but it's a stock which is a very, very well-run business, Interglobe Aviation in India. It's the dominant low-cost airline company in the country. So it's like the Ryanair or Southwest of India. But the attractive part is, unlike the European low-cost guys who are just purely point-to-point, this is a little bit of hub and spoke as well. So in the US, the hub and spoke is always done by the legacy guys, not the low-cost carriers. So here, a company is very strong, a low-cost carrier is very strong with a hub and spoke model as well. So on the trunk routes from, let's say, Bangalore to Bombay or Bangalore to Delhi, their market share is humongous, and then they have these other small hub and spokes as well. So how do you displace the lowest cost provider from a space that is already extremely dominant? So that's a very, very powerful mode, and that's a growing mode because of the cost advantages that you get and the network effects that you get. And India as a country is getting to a tipping point where for the majority of the middle class, it's being affordable to fly. And if you really think about it, the airline business should be a function of how many people are traveling. And India being a hugely populated country with a large geography where flying makes a lot of sense, and where there is a lot of internal people movement for tourism or people working or studying and so on and so forth, it's not that difficult to say 10 years, 20 years down the line, it will be a huge aviation market. And as a company which holds 40% market share with the best cost metrics and with a great management team who has skin in the game, 70% kind of shareholding with real long-term execution and vision, I think it's a very, very attractive long-term story. But as I said, we have vested interest in the stock, and I would encourage all of them to do their own research. But on a more general point, I think everyone understands the consumption story in emerging markets. So if you speak with anyone or do any research, everyone will say emerging consumer is a secular growth story. But I think where most stocks get mispriced is, let's say on the consumer non-discretionary side, the consumer staples kind of stuff. You see a good consumer staples in all these countries trade at 40 times earnings or 50 times earnings. But if you look at the discretionary consumption or big ticket consumption, which is like say travel, hotels, real estate, all these big ticket consumption or discretionary consumption, they have their own cycles. And even companies with very, very strong market shares, with very, very attractive long-term growth rates, 1-2 years can be bad, but long-term growth rate, they are not that costly. So there you can find a great company with a great management at a price that you like to own. If you are looking at it like in say last year, when markets were pretty weak. So I think that's the opportunity. That's the real area where I focus, because most Western investors are just playing the consumer staples team. Just go and say, okay, more people are going to use soaps, more people are going to use those kind of things are pretty well played out or well priced. But I guess the discretionary consumption, where there is a lot of economic volatility or economic sensitivity, I think that's the sweet spot, or at least that's where I'm hunting for in most of the emerging markets.
Thank you very much. Now our viewers have the chance to do a lot of their research for their own. Always do your own research. Thank you very much for the insights, Gokul.
Thank you.